Welcome to Bloomberg Markets Asia. I'm Haslinda Amin, live from the Milk and Asia Summit here in the Lion City. Our top stories today: caution in the markets as traders debate the size of a Fed rate cut expected later Wednesday. A weaker yen boosting Japan's equity benchmark, while Chinese stocks are flat on return from holiday. Also ahead, Nippon Steel gets more time to convince Washington to approve its U.S. steel takeover bid, with the decision now unlikely before November's presidential election.
Annabelle Jewelers also live here in Singapore for the Token 2049 conference, where global crypto leaders are gathering to chart the future of the cryptocurrency and blockchain technology.
And Belle, I'm coming to you live from the Milken Summit here in Singapore, where global leaders are gathering to discuss key markets issues, the likes of geopolitical themes, the mood on the ground. Well, pretty cautious depending who you're speaking to. I've just moderated two panels, and the likes of Ray Dalio as well as Chow Kiet of GIC. They're pretty cautious. They say perhaps when you take a look at valuations right now, especially in the US, they're pretty much overstretched. But amidst all the uncertainty, other investors are saying there are opportunities. I mean, when you take a look at sectors like healthcare, for instance, well, you know where to put your money. Let's take a look, or rather take a listen to what Ray Dalio himself had to say.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
There you have it, Ray Dalio saying if you're just preoccupied with that 25 or 50 question, well, you're missing the point. Let's get more on markets with Jody Johnson, Vice Chair of Capital Group, one of the world's largest investment firms with more than $2 trillion in assets under management. Jody, good to have you with us.
Thank you. It's great to be with you.
We just had Ray Dalio saying, you know what, it doesn't matter if the Fed cuts 25 or 50. Do you agree?
Actually, I do agree. I think the market is obsessively focused on whether it's 25 or 50. I think what we know for sure is that the direction is down, and it's a little hard to know how they would exceed expectations at this point, because those who are expecting 25, I think if they do 50, perhaps people worry that the Fed knows something about the economy being weaker than maybe we thought. So I think either way, it's fine. I think it's more important to stay focused on the longer term, and particularly for equity investors to think about a 5 or 10-year horizon. What's happening now is really kind of noise, not signal.
But if you were to hazard a guess, will it be 25 or 50?
I'm probably more in the 25 camp, but I am not a fixed income expert, and it's not changing anything I do in my own portfolios.
So in terms of the investments right now, you take a longer-term perspective, 5 to 10 years, where do you see opportunities?
I think there are opportunities all over. You know, the market's been very narrowly focused on technology and AI in particular. It hasn't focused nearly enough on the applications for AI. So in healthcare, speeding up development, drug discovery, clinical applications, et cetera. In industrials, companies that are facilitating decarbonization, energy transition, building of data centers, and all this stuff that's going to power the AI revolution. There's so many companies that can benefit from it, and we hear this. We visit with 20,000 companies a year, and we hear in these visits how they're already incorporating this into their own operations and saving themselves money, improving their efficiency. So I think there's just many, many benefits from what the market's narrowly focused on that are not yet reflected in a lot of other stock prices.
So these opportunities that you're talking about, are they in the US, in Asia, and in Asia, where are they?
All over. I mean, this is global. All companies are experimenting with AI and figuring out how it's going to work best for them. I mean, I think Asia is extraordinarily cheaply valued right now. If you look at it certainly relative to the US, there's lots of opportunity here in stocks that are very reasonably valued all throughout the region.
You talked about how they're reasonably valued here. How about the US? I mean, views out there saying that, they're overstretched and it's time for a correction.
The U.S. is certainly trading at the top end of its historical valuation ranges, and that's in part because of the dominance of the large tech companies that are more highly valued than the market overall. But if you look more broadly, the market is not at extremes. If you think back to the late 90s, we had one group of stocks that was extremely highly valued. When that group rolled over, the rest of the market actually went up. So sometimes you get sort of a two-tiered market.
So do you see a correction?
I think
anytime soon.
I think it's possible. I do think that expectations have been very high, and over the last few months, the technology sector has kind of bifurcated a bit in how stocks are behaving. So it could be that that sector cools off a bit as these expectations get digested, and that other sectors kind of pick up the slack. More recently, you've had consumer staples acting better in the U.S., for example. So I see it more as shifts within the market than a big correction for the market as a whole.
We're seeing a lot more volatility. We're seeing this in tech stocks, for instance. We're seeing this in Japan, for instance, in a huge way just recently. Is this a reflection of what's to come?
I think it's partly a reflection of a changing market structure. I think there's much more leverage being used and many more people investing along factor models, for example, and a little bit less on fundamentals. So the leverage, I do think, is concerning. I think the degree of reaction to relatively small earnings misses, let's say, is very concerning when stocks are going down 15 or 20% on those earnings reports. So that does give me some pause about the overall health and structure of the market. But again, getting back to fundamentals, the market's been driven largely by earnings growth, which has been fairly strong, particularly in the technology sector.
And the biggest risk for the markets right now, we talked about how there's so many risks out there, factors, geopolitics, a changing world order. What are you most concerned about?
Well, I do think what underpins the markets is faith in the stability of the U.S., the U.S. dollar, and U.S. government debt and interest rates. It really is the underpinning for the pricing of the whole world system, essentially. And, while I'm not concerned about a long-term resolution to the election, if we do have a period of time where there's unrest or uncertainty about the winner or something like that, I do think that could cause the strength and stability of the U.S. to come into question. So certainly for the whole world, that could be a risk.
Can you trade the U.S. election? How
I think it's very, very difficult. We have our thoughts about groups that would benefit or be hurt, but again, the election will be close, and you could have divided government where you have the presidency in one party and the Congress in another, in which case perhaps none of those policy proposals actually gets enacted. So I think it's very hard to construct a portfolio with any confidence about the outcome of the election.
Is there any clarity on what a Harris government would bring in terms of policies or what a Trump government would bring?
Both have been fairly light on policy specifics. Harris has talked about wanting to invest in housing. Trump has talked a lot about tariffs on China. We've seen some sketches of outlines of proposals there, but I think there still hasn't been very much that's concrete. And again, can it get passed if Congress is of the other party? That remains to be seen.
What's clear, though, when it comes to the U.S. is an increasingly protectionist approach, an increasingly nationalist approach. Does that impact the way you look at investments in markets like China, for instance?
Yes, absolutely. I think someone said it, I can't recall who, but someone said that every company needs a foreign policy. And I really think that's the case. I mean, companies have to think much more now about where are their supply chains located, where are their customer bases located, how might they get caught in the crosshairs if there are disagreements between the U.S. and China. And so we try to be very careful in thinking about industries that could become much more politically sensitive than maybe they have been in the past. And so it's not to say there aren't opportunities around China, but one has to be very careful.
So stay invested in China, just choose the sectors wisely.
Have to be very, very careful and think about how strategic is that industry in a different geopolitical environment than what we have known. So which industries are these? Well, I mean, some of them are obvious areas where already the U.S. has put in place restrictions on investment in China. But you've seen, like even in the pandemic, how healthcare got sort of weaponized, or even things like internet commerce. The government took actions against some of those companies. So one has to think very carefully about possible scenarios there.
How concerned are you about the economic malaise in China? We had Xi Jinping saying, he's looking at a 100-year storm. Pretty ominous, and we're beginning to see that already. It's struggling to turn around its economy. How big a concern is that for you as a longer-term investor?
I think it's definitely a big concern, and not just for China and Chinese companies, but for many Western companies, particularly those who have relied on China as their most significant source of growth. You see it in consumer goods. Luxury, for example, is struggling because of the weakness in the Chinese consumer. And I think historically the government would respond with a big stimulus. I think this time around it's very different. It's not going to be an infrastructure stimulus. The problems of the property market have really caused a tremendous wealth effect for the Chinese consumer. And so I just think these are things that are not quickly solved with government action are going to require much longer time to work out.
What kind of approach should one take when it comes to investing in China? We know the likes of Bridgewater, they've been cutting down their holdings in US-based Chinese stocks over the last 7 quarters, and it's down about 80%. What's the approach to investing, I guess in a way, safely in China?
Well, we're always doing research in China on Chinese companies, regardless of the environment. Obviously, one has to be very cognizant of valuation. And one thing in favor of investing in the whole region, not just China, is that valuations are very attractive. But again, one has to be exceedingly careful about the corporate governance, the accounting, and those are the kinds of things we have experts on that we look at very, very closely. So we do invest in China, but we're extremely selective about the management teams, the quality of the financials, and the like.
We know that leaders like yourself have been mulling over all the challenges and all the risks in the market. In your conversations with your clients, are there key takeaways? Are there, I guess, things that you've learned that have surprised you somewhat?
In terms of what the clients are focused on? Well, I mean, we do get a lot of questions about things like that, like can you invest in, is China investable? Are various markets investable? A lot of questions about the election. But again, I think they tend to be rather short-term focused. And what we try to do is to continue to draw out the time horizon. In some ways, it's easier to predict 10 years from now than it is to predict next quarter. And trying to remain focused on that long-term prize that we can identify through deep fundamental research and knowing companies for a very long period of time, that's really what we try to highlight to the clients. The value of letting your money just compound for you and staying in the market.
And, some exciting markets have emerged, the likes of Japan, for instance, the likes of India. What are you most excited about when it comes to Asia?
We've been large investors in India for a long time, and I think we've always viewed that as a very dynamic market, very entrepreneurial, very high-quality management teams, and a lot of underlying, obviously, growth and dynamism there. So that remains attractive, although it has gotten more expensive. Japan is interesting because there have been significant changes in corporate governance, in focus on returns on capital, in really just, I think, management awareness of how to make companies more profitable and grow faster. And so that's on our radar screen in a way that, probably much more so than any time in the last decade or so.
All right, Jody, we had to live it there. Jody Johnson, Vice Chair of Capital Group. We're coming to you, of course, live from the Milken Asia Summit here in the Lion City. And coming up, a great lineup of guests. We'll speak with Malaysia's Natural Resources Minister and the CG Corp Global Chairman later this hour. But first, the outlook for cryptocurrencies as Bitcoin pairs its rally ahead of the Fed decision. We're live at Token 2049 Crypto Conference next. Keep it here with us. This is Bloomberg. Welcome back, and we have breaking news to tell you about. Tupperware Brands preparing to file for bankruptcy as soon as this week, and that's according to people familiar with the matter. That's following a years-long efforts to revive the business amid waning demand. The home goods brand, which has for much of a century defined food storage, is planning to enter court protection after it breached the terms of its debt and enlisted legal and financial advisors, and that's according to people familiar with the matter. Again, Tupperware Brands planning bankruptcy as its revival efforts have faltered. I'm here at the Milken Asia panel and summit. Now let's get to Token 2049 conference, also in Singapore, and bring in our tech reporter Annabelle Drulis, who joins us from that event. Belle, what are you hearing from your conversations there? What is the mood?
Well, as you might expect from one of Asia's biggest cryptocurrency events of the year, here on the ground, thousands of people, and they're making that very strong bull case, really, around the cryptocurrency and the outlook for the industry. Of course, cryptocurrencies this year, it's been sort of a funny outlook, and it hasn't really perhaps transpired in the way that some would have predicted or hoped. And you had a lot of optimism around spot crypto ETFs. You had optimism as well around the outlook for Fed rate cuts on the horizon. This year, though, we haven't really seen a greater narrative taking hold, because you had, for instance, that question around whether it would be DPINs or decentralized physical infrastructure networks, so that focus and an excitement around real-world infrastructure being made more accessible to everyday people through blockchain technology. Now we're shifting attention to blockchain-based gaming projects instead. Again, connections to AI. Nothing is really hitting the mainstream just yet, and that's really what people are talking about here as well. What will be that breakout technology or that breakout application that really takes this project to more people, gets more users around the world? The future very much, as we said, tied to the more macro picture, what the Fed does next. We have seen Bitcoin rising in anticipation of Fed rate cuts this week. And then also, of course, the US election very much front and center here today, given you've got those expectations, those hopes perhaps for a Trump presidency, given we've already seen his family himself taking part in some DeFi or decentralized finance projects. They're certainly seen as being more friendly to this industry, and perhaps there's that question of, well, will those crypto holders in the US, there are millions of them, start to perhaps play an influential role in the outcome of the election as well, Has?
Well, Belle, this is still an industry that's in its infancy, and regulation is a big issue. Having perhaps a coordinated approach is important. What are the discussions like on regulation?
Yeah, regulatory clarity hasn't actually really transpired that much this year, and it has been perhaps something, again, holding back the industry from that more mainstream adoption. Certainly it's been something that's been attributed to keeping institutional money still on the sidelines. Yes, there's been sort of banking projects, for instance, particularly in the asset tokenization space, also around stable coins. We've sort of seen that inching along this year, but again, institutional money largely still out of the cryptocurrency picture and awaiting further regulatory clarity to come. It does really come back perhaps to the US election in particular. Again, former President Trump himself seen as someone more closely tied to the cryptocurrency industry. He's already been speaking just in the last few days about the need for the US to really be the lead innovator in this space. If the US isn't doing it, then he's concerned other countries will take pole position. He cited China, even though, of course, we know Bitcoin and other crypto tokens are still banned trading on the mainland. We still do see activity in that space, particularly around NFTs. Kamala Harris herself seen as someone being a little bit more cautious on cryptocurrency. We haven't seen great action or clarity coming through from the Biden administration over the past few years. So again, cryptocurrency regulation, it still very much depends on what the US does next.
A lot of factors come into play. Belle, thank you. Annabelle from the Token 2049 Crypto Conference here happening in Singapore. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. Bloomberg has learned that Nippon Steel will receive an extension in the security review of its $14 billion bid for U.S. Steel. That's likely to push a decision on the politically contentious takeover past the U.S. presidential election in November. Our breaking news editor, Gareth Allen, joins us for more. Gareth, what does this mean for the deal's chances? How are we assessing it?
That's right. Well, I mean, essentially, we've kicked the can down the road a little bit. I mean, the initial deadline was going to be next Monday, the 23rd, and Biden had quite unequivocally said that he was going to kill the deal at that point when the review crossed his desk. So that now has been pushed back. It's going to be after the election. So it does give a small sense of life back to the deal. You know, I mean, the politicians in the US are still said they're against it, but for the moment it remains on the table. It's got another 90 days of review, so in that sense it does give it somewhat more potential than it had before.
Right. The question remains, of course, will it happen? I mean, does it make a difference that Biden, Harris, and Trump all say they oppose the deal?
I mean, that's exactly right. I mean, there is an enormous political pressure against the deal. I mean, they've said that they want US Steel to remain an American company. I mean, the two companies themselves, Nippon Steel and US Steel, they've both said that it will remain a US company. You know, Nippon Steel has pledged billions of dollars of investment into the company. They've said that it will remain a Pittsburgh-based company, and yet US Steel has said that, you know, if the deal doesn't go through, it may not even be able to remain in Pittsburgh. It may have to cut jobs. It may have to close plants. So, you know, there are enormous pluses that the companies are pointing out, but, you know, from the political side, it still does look like there are enormous hurdles to get through to get this deal over the line.
So how might this play out? How might it push it one way or the other?
Yeah, I mean, I guess the fact that it has been pushed back to after the election, at least it means it won't become a political hot potato in terms of the campaigning. So whoever does win the election will then be left with dealing with the decision on whether to allow it to happen or not. So in that sense, you know, which way it will go, very hard to say, but there certainly is more potential now for it to get through.
To say, watch this space. Gareth Allen, our breaking news editor, thank you so much for that. Now, here are some of the top corporate stories we are also following. Zijin Mining Group says it won't be deterred by Canadian measures limiting foreign involvement in its minerals sector. China's most valuable mining company says it will absolutely continue to seek out investments in Canada, especially junior exploration firms. Canada wants to restrict mining deals involving foreign state-owned entities in a move seen as targeting China's dominance in critical minerals. Senior U.S. and Chinese economic officials are expected to meet later this week in Beijing. That's as the Biden administration seeks to once again confront China over alleged industrial overcapacity. The U.S. delegation includes officials from the Treasury and the Federal Reserve Board and will be led by Treasury Undersecretary for International Affairs, Jay Shamberg. And Woodside Energy says it has agreed to a 10-year deal to supply liquefied natural gas to Japanese utility JERA. The deal starts in 2026, and Woodside will source the LNG from its global portfolio. Speaking separately at the Gastech conference in Houston, CEO Meg O'Neill says she sees significant future upside for the LNG industry.
The total global LNG market today is equivalent to about 12% of coal use. And so there's a lot of room for us actually to grow the LNG market, to provide that reliable energy, provide that affordable energy, and tackle climate change.
More ahead here at the Milken Institute Asia Summit. In a moment, we'll discuss Malaysia's petrol subsidy cuts and its progress towards reaching net zero emissions. The Minister of Natural Resource and Environment Sustainability will be joining us. This is Bloomberg.
The one thing that you have to learn about the Fed is that it claims it will never be pushed around by the markets. So if the markets are advocating for 50 and they believe that they want to do a gradual approach, and that's where the consensus is, they will do a gradual 25 basis point approach just to show that markets are not pushing them around. But I, as one economist who's in the minority, think that we really should do 50 because it's time to get back to a more neutral stance, and we're way above that now.
Obviously, 50 basis points would be more welcome. But I think it's much more important to hear the comments and the messages from the Fed and seeing its direction.
Some of our guests here at the Milken Summit discussing the expectations for the Fed decision now just a few hours away. Well, I spoke earlier with Bridgewater Associates founder Ray Dalio, who says the overall picture of the U.S. economy probably warrants a smaller rate cut from the Fed when they make that call later Wednesday.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. Okay, Fed policy. What does the Fed have to do? Fed has to keep interest rates high enough to satisfy the creditors, that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
What is the state of the U.S. economy? I mean, we're talking about 25 or 50 based on the assumptions of how the economy is doing.
Okay.
From the data that we've gotten so far, does it justify 50? I mean, what does it say?
We have a model for estimating what should be. The economy right now is very, very, very close to an equilibrium level in many ways if you're just looking at what is and you're not looking at the debt problem. And it would look like there should be a modest easing of interest rates and a move gradually to a more positively sloped yield curve, what we would call normal. It's fairly normal, except it's not normal in the way that it's so skewed. So if we look at the markets and we look at the way the population's income levels are for the various sectors, if you look at the bottom 60%, if you look at the politics, the left and the right, and the nature of what is going on, the two worlds that we live in terms of that, the economy and the values, that brings us to the...
How do you see it playing out? How do you see the next few months, 50 days to the elections? How do you see that playing out?
Well, as I say, I think that there's two questions. First, the question of, will we have an orderly transition of power? That's quite amazing. Will we have democracy work as it is? That cannot be assured, right? So, because behind all of this is that we have irreconcilable differences, not just pertaining to taxes and wealth and economic policies and so on, but in terms of values. You know, it's how do people raise children related to sexuality and all of those things. There are those gaps. So I think we hope for an orderly transition of power. Isn't it quite amazing that we would think, could we not have that? And then we go beyond that, and then we say, what about those policies that are going to be dealt with? Nobody's going to deal with the debt policy. That's going to end up being monetized down the path. Then the question is issues of taxation, and those issues of taxation will have an important impact on the capital markets. If they're bought for after-tax returns, by and large. It's the important thing. You lower corporate income taxes, you raise corporate income taxes, it makes a difference to prices. So we're going to have those issues, a lot of issues to talk about regarding the election. I think when we go beyond that, most likely, there is going to be irreconcilable differences, and I think that you're going to see more movement to states. So there'll be a challenge of what does the central government control, and what do the state governments control, and is there an obedience in a sense. So we are coming more to a fragmented set of circumstances. What we would need, I think, is strong leadership of the middle to bring the country together and leave and isolate more of the extremists, if that was possible, and then to make reforms.
That was Bridgewater Associates founder Ray Dalio. Now, one of the topics of discussions here at the Milken Institute Asia Summit is how regulators are seeking greater alignment on decarbonization targets to protect the environment and promote more sustainable growth. Let's discuss this and more with Nik Nazmi bin Nik Ahmad, Malaysia's Minister of Natural Resources and Environmental Sustainability. Nik, good to have you with us. Minister, when it comes to energy, there's a growing need for energy in Malaysia as it grows. We're looking at 5% growth potentially for the country. Is there a need perhaps that you'll have to curb, your exports of LNG, of net gas to protect the sources at home?
Well, yeah, I mean, that's a real challenge for us because we've made commitments of no new coal plants for our target of net zero by 2050. We will be, in fact, I think we will be eventually looking at LNG imports into Malaysia, which is something which is quite remarkable because we are an exporter at this point of time. So, that will be the situation, and that's a challenge that we have to address.
Give us a sense of your energy needs. I mean, you talk about possibly importing LNG, unheard of until now. What might you need?
Yeah, I mean, I think, as we build the timeline towards 2050, currently we are using, we have 25% renewable energy capacity in our electricity generation. So 80% of the current generated energy is still coal and gas. So yeah, as we build up our solar plants, we retire our coal plants. We still have hydro, but there's limited room to build new hydro, particularly in Peninsular Malaysia. So that bridging role will be played by LNG imports for us to meet our energy demands.
We know that Malaysia is trying to build and develop its green energy industry. We're also hearing perhaps from some of the states in Malaysia wanting to manage their resources. How do you respond to that?
We've had productive discussions. We are working on the carbon capture, utilization and storage legislation at the federal level. And yes, I mean, there are, various views coming from the industry, from state governments. But I think, the government has been engaging, federal government has been engaging in fruitful discussions, and we will soon see a resolution to that so that we can use or utilize CCUS as part of our decarbonization strategy. And at the same time, we are also having fruitful discussions with regards to the climate change bill, which will enable us to meet our international commitments by working together with our state governments as well with regards to addressing climate mitigation and adaptation.
With regard to the states wanting to manage their own resources, how successful do you think they'll be, without federal support, the likes of tax breaks, incentives?
Yeah, we believe that climate change is something that it's a huge challenge, not just for state governments. It's a huge challenge for the federal government. It's a huge challenge for the region and in fact the world. And that is where I think pooling our resources together matters. No state in Malaysia disputes that when it comes to reporting to the UNFCCC with regards to our commitments in the Paris Agreement, that is the role that the federal government plays, right? But we also recognize that the states, they have their own strengths. We obviously Sabah and Sarawak, our Borneo states, they have more powers than other states on the peninsula. But even for the peninsular states, they have their own focus with regards to rare earth, with regards to forestry policies, and we are coordinating all that so that we can have a coherent national policy.
Give us a sense, Minister, of the kind of federal support that is willing to give to these states.
Well, of course, there is support in terms of capacity building. There's support that we do in terms of technical support so that there's expertise that can be built at every level of government, whether it's the federal, state, or local governments. Then there is also this new instrument, what we call the ecological fiscal transfer, that Malaysia introduced in 2019. And that started with, for the first time, we distribute money for forest conservation to the state governments. And that started with 60 million ringgit, and Prime Minister Anwar has increased it to 200 million ringgit per year distributed to the state. So that's some form of support. We are also working on a national carbon market framework, which will enable the states to unlock their natural carbon sinks in terms of trading in carbon credits.
Minister, we're fast approaching the month of October, and from experience last year, this is the month when the whole region experiences the haze, which can cost governments a lot of money. What assumptions are you making about the haze this year? What are you preparing for?
Well, I think so far, for us, we have had positive discussions. In Malaysia, I've spoken, to the state governments. I've spoken to our various ministries to overcome forest fires, peat fires in our country. But we've also had discussions with our colleagues in ASEAN, including with Indonesia. And I've also spoken to our plantation companies, because Malaysia has some plantation companies operating in Indonesia, so that everyone can play their role, and we will be able to address the issue of peat fires constructively, and hopefully we are able to handle the haze situation better this year. And we have the ASEAN agreement on transboundary haze pollution, which we may relook at ways to upgrade that agreement to have a more effective role in terms of addressing this problem.
Minister, before we let you go, we know that Budget 2024 will be tabled next month. Anything we should be expecting in terms of your ministry?
Budget 2025. Yes, for us, I think there is one of the main focus is with regards to empower our environmental department. We have, for example, increased fines for environmental crimes. It used to be a maximum of 100,000 ringgit. Now the maximum is 10 million ringgit. There's mandatory imprisonment up to 5 years. But there's also the need to empower the legislation itself, which dates back to 1974, and also the department. And I had a productive meeting with the Minister of Finance on how we can strengthen this as an enforcement measure, so that the demand from our citizens for cleaner and better environment can be addressed effectively by the government, and it can also it can raise its own revenue, hopefully.
Minister, thank you so much for your time. Hopefully, we'll be in the same space for the next interview. Nick Ahmad, Malaysia's Minister of Natural Resources and Environmental Sustainability. Well, coming up, exclusive interview with Nepalese billionaire and CG Group Global Chairman Binod Chowdhury. We'll discuss the conglomerate's growth outlook next. Keep it here with us. This is Bloomberg. We're here live in Singapore as the 11th Annual Milk and Asia Summit gets underway. Joining us now is Binod Chowdhury, Chairman at CG Corp Global. Binod, good to see you again.
Good to see you again.
Conversations here have been about the investment climate. I mean, amidst all the uncertainties in this world, how are you assessing it?
Well, it's very difficult to generalize. I mean, there are, like India is on an all-time high. I mean, but some other countries in the South Asia, where we come from, I primarily come from Nepal, as you know. I mean, there are challenges in this part, but we see great opportunities
Where
in
exactly?
East Asia, East Europe, Central Europe. We're doing a lot of new acquisitions. We're growing in Africa, particularly in the East African markets. We are very gung-ho on Dubai, UAE. So we have the advantage of being a company, which has evolved by becoming pretty much global, I would say, through our 5 global headquarters, each one independently driving their M&A initiative, growth initiative. So, some lose, some gain. We keep balancing.
You talked about those acquisitions in Europe. What exactly are they? And are you looking at more acquisitions?
F&B space. We are also seriously growing our hospitality all the time, For instance, our farm in the Philippines, which is emerged as being, without any modesty, one of the world's top 4 or 5 ultimate wellness destination for detox, anti-aging, rejuvenation. We're taking it to the world. We are taking it where we're in the process of opening one in India, one in Middle East, and one in Europe. So, I mean, these are exciting times. And in East Europe, we are growing our FMCG, fast-moving consumer goods, number of candidates. And you'll be happy to know, finally, IPO is on its way. And we have consolidated our global presence, which spans from Bangladesh to India, of course, and Nepal to Egypt, in African continent, Serbia, in European, East and West European and region, as well as Kazakhstan operation for Central Asia. So it's truly a global platform in terms of manufacturing and distribution.
You're talking about how the IPO is on its way. When exactly? Where are you with that?
We would probably go for a pre-IPO, first quarter 25, and then get the company a little bigger, and hopefully within first quarter 26.
Binod, when it comes to the markets, they're very preoccupied with the Fed's cut, 25 or 50. As an investor of the world, how are you looking at this? How important is it that we see these rate cuts?
Well, I think, the cost of, your blended cost of capital, which includes the credit, is of course a very important element. That's, we balance our return on equity based on the interest scenario in the short as well as in the long run. So it does push our returns down for any investor anywhere. But I'm happy that it should go in the right direction in time to come. And you can't generalize. You can't. It's a matter of in which area there are opportunities and liquidity. The markets where we are in, I mean, for instance, we recently acquired from TPG a bank in Sri Lanka. When Sri Lanka was in the middle of a huge crisis, they decided to exit and we decided to enter. You know that we run the largest bank in our own country.
And how are you assessing the investment climate in Sri Lanka ahead of the elections?
I think, I hope that the current disposition would stay in power. It's more than individual. I would, and of course, I'm a great admirer of the current president. He did a fantastic job in terms of bailing out Sri Lanka in the midst of a chaos where no one wanted to take over. And he's bailed it out, and I think today Sri Lankan economy is in a far more comfortable position. We have 16, 17 hotels, we are in a bank, and our food business, and also electric vehicle business.
So you might invest more in the country?
Of course.
You're also optimistic about India. You have, I think, about 92 hotels there.
Yeah.
What are your expansion plans?
In India, we run our biggest business in India is YY. We're the second largest player. We are also in the infrastructure space, real estate, food park, special economic zones. Our hotel portfolio in India has done very well. We have two arms. One is a brand which we own ourselves. It's called the Fern, with more than 100 hotels in operation. And our partnership, which I'm really always very excited about and very happy about, with the Taj, the IHCL. We recently signed with IHCL a new platform, a joint platform called ECM, which means oneness, to build 50 hotels by 2030. We already have 17 hotels worldwide, including Dubai, of course Sri Lanka, Maldives, Nepal, and parts of the Indian territories in the wildlife space.
Amidst all the optimism, Vinod, what's the biggest risk? Some say perhaps the US election, which could change the climate for investors.
You know, I really would hope whoever wins in these states, that the war will end. I would wish that. You know, more from a humanitarian perspective, you know, your heart goes out to cry to see when you see those, you know, very emotionally, you know, devastating situations. And of course, it will also have an economic impact in the region. You know, I don't think the world can afford the kind of attention that we see here. In the Asia-Pacific region, we can't see the tension that we are seeing between China and the US. I think it all needs to be managed, or for that matter with Russia. I think I'm very optimistic that after the US election, the world will take a new direction. And I think we will move towards a better sense that's going to prevail.
Right. Vinod, always a pleasure to speak with you. Thank you so much for that. Vinod Chowdhury, Chairman at CG for Global. Plenty more ahead. Keep it here with us. We're coming to you live from the Milk and Asia Summit, which is really noisy right now. Keep it here with us. This is Bloomberg. Some of the top stories we're tracking in India. Former U.S. President Donald Trump says Indian Prime Minister Narendra Modi plans to meet with him next week. The Trump campaign did not immediately respond to a request seeking details about the visit. Modi will be in the U.S. this weekend to attend a Quad Leader Summit in Delaware that's being hosted by President Biden. The head of Delhi's government has resigned from his post just days after he was granted bail in a corruption case and released from prison. Arvind Kejriwal will be replaced by Atishi, a member of Delhi's cabinet who's held roles in education and power. Kejriwal and his party, AAP, have been under pressure for more than a year amid allegations of impropriety in a liquor distribution case. And Lenovo has started building AI servers in India. The Chinese company says it's now making the large, powerful computers in southeastern India, moving beyond products such as laptops and smartphones. That is it for today's show. Keep it here with us. This is Bloomberg.